In this video, I'm gonna be revealing you the best ways of using support and resistance to assist you in making the better trade decisions. If your charts now look like this, after watching this video, they will look like this, and you'll be doing this, this, and this. Let's not waste the time. Let's go. So first, what is support and resistance? Support and resistance are basically price levels that mark important turning points on the market, and you can think that them like barriers that prevent the market to go in a certain direction. A support is an area on the chart, on this chart, prevent the market from falling below or going downwards. Similarly, a resistance level is an area on the chart that prevent the price from pushing above or upwards. The question is, why do this level works? This answer is basic human psychology. Behind this chart there are real traders like you and me, and all humans have greed and fear. These emotions of greed and fear is what makes support and resistance so powerful. In my Telegram channel I constantly say that there should be no emotions in trading. So let me explain. Let's say that you watch the price make this massive up move. So you think that the price is an uptrend, right? Then you see the price make this pullback. You decide that it's a good opportunity to buy here. So you buy the stock at this price. As soon as you buy, the price tanks down, right? So you realize that the trend has already changed, but you are too afraid to vacate your position. The loss is too big, and so you wait for the price to make a small up move so that you can exit at a smaller loss. Your patience is rewarded when the market makes an up move right at your entry. Hence, you are now at a break-even level and you thank God for the mercy and sell your position. Your sell order creates a selling pressure in the market and the price drops. A lot of traders like you were trapped at this price, and therefore when they sell their positions we see a strong down move in the market. So this becomes a valid resistance level. The same thing happens at a support level. The traders that sold here were trapped in a losing trade. Therefore, they exited their position here and created a buying pressure. Hence, the price went up and these levels become a support level. Support and resistance are one of the foundations of technical analysis. So it becomes very essential to learn how to correctly plot these levels. How do you identify support and resistance levels? You would be surprised to know that the most of the traders don't know the correct way of drawing support and resistance level. Yeah, the best way of identifying support and resistance levels is by looking for the most obvious turning points. That means we are looking for V-shaped market turning points. So on this chart we see a V-shaped turning point in the market, and we plot a support level here, and as you can see the price tested the same level and the level gave support to the price. Similarly, here we see a turning point and we mark a resistance level here. As you can see, the next time the price came near the resistance area, it saw a sharp sell-off. The mistake that the most traders make is that they see these small pullbacks and plot support levels here and the plot resistance levels here. These small 2 to 3 candle moves can't lead to so strong level, and these are weak levels and will not act as barriers to the price. So we want to look for major turning points to plot the support and resistance levels. Now an important characteristic of support and resistance levels is that they are bipolar in nature. This means that whenever the price breaks a resistance level, it becomes a support, and inversely, when the price breaks a support level, it turns into a resistance level. We can combine these characteristics with a moving average to find the best trading opportunities. For instance, here we have 15 period EMA represented by this blue line. We marked a resistance level here and the price broke above it. Hence, we now expect the price to find support at this price and make a high move. We also realize that the 15 period EMA is right around this level. So there is now a high probability that the price will find a support at this level. So we can buy here. We can keep our stop loss below the support level and keep our targets at 1.5:1 risk to reward ratio. And as you can see, the price comes into this area, finds support and makes a strong up move. So we easily achieved our targets. Yeah, it's easy. The same thing happens on this chart. Here we see that the price breaks this support. So now we expect this level to provide resistance. And in the future, as new candles are formed, we notice that the 15 period EMA coincides with the resistance level. Hence, there is a high probability that the price will find a strong resistance here and continue this downtrend. So we can sell here and we can keep our stop loss above the resistance level, and we can place our targets at 1.5:1 risk to reward ratio. As you can see, the price comes into this area, finds resistance and makes a strong down move. We made a profit on this trade. Now we can also combine support and resistance level with MACD indicator to find opportunities. So we could use MACD crossover to trigger our entries at key levels. So for instance, here we see that the price broke this resistance level. Hence now we expect the price to find support here. So when the price touch this level from above, we wait for the MACD line to cross above the signal line. The crossover happens here. So we enter on this candle and we keep our stop loss below the support level. We can keep our targets at 1.5:1 risk to reward ratio. And as you can see, we made good profits from here. Here's an example of combining MACD with resistance level. So here we see that the price broke this support level. Hence now we expect the price to find resistance at this level. When the price arrives near this level, we will wait for the MACD to give us a bearish crossover. That is, the MACD line should cross below the signal line. Here is our crossover, hence we can sell here. We can keep our stop loss above the resistance level, and we can place our targets at 1.5:1 risk reward ratio. So the moving average in MACD are just an example. You can use different indicators and test them by yourself. I've given you the best ways of using support and resistance level to generate consistent profit. I'm continuing my free and quality training videos. So if you enjoy this video, don't forget to hit the like button, subscribe my free channel so you don't miss any new videos. Bye.